Hello, warm welcome to my investment mastery series on Thursday evening. Can you guys hear me? Can you see me? Please start typing. Let's acknowledge our presence. Today is a very interesting topic and it's on life insurance. Hey Anandita, thank you for joining in. Hi Vinita. Hey, anybody else who's joined in, could you acknowledge your presence? Okay, we were asking all our questions. Got it? Got that, Kavleen, Rakhi, Beena, Nandita. Okay, God knows what happened because I couldn't see any comments coming and I was like, what happened? Sure. I am happy to repeat it. Yes. So let's begin now that the comments are completely working. And I think that's what this work is all about. Sarab, Rekha, welcome. Hey Smriti. Warm welcome everyone. So it's interesting to see everybody back. So let's begin, and today is a special topic and it is called life insurance. So let me begin by sharing what life insurance is. So life insurance chiefly is a risk management tool. If anything happens to the main member of the family, God forbid, then the intention is to help the dependents take care of their expenses and maintain the same quality of life that they've been used to living. So that's the purpose of life insurance, guys, and the intention is basically protection of the dependents. And mostly in women's cases, like I was sharing, it's us women who are the caregivers and dependents. So we got to make sure that we are covered for the risk that we are taking by being dependents, and our children are covered too, or if we have dependent parents, then they're covered too for their lifestyle. The money that we invest in this scheme is completely protected. I mean, the money that we receive, it's called the sum assured, which we receive after X number of years of the policy complete, and that sum assured is pretty much guaranteed by the life insurance company. And this is guaranteed only when you pay the premiums regularly. So premiums are the subscription fee that you pay. So that's about the premium, the sum insured. These are some new terms. If you don't know about the life insurance, then these are the new words to know about. Inflation protection. Life insurance is generally not inflation protected, because insurance is fixed, a fixed amount you receive, and there are no guarantees that it will take care of the rising inflation in our country. If you remember, I did mention that inflation is at about 6.9% right now. So that's how it is, guys. Let's talk about some guarantees now. The sum assured is guaranteed if you pay the premium. That's the thing. And Life Insurance Corporation carries a sovereign guarantee, so better option to go with. And like I said earlier, these policies have a term, and there is a minimum term, say 2 years, 3 years, within which you cannot take your money back. And after say about 2 to 3 years, you can take your money back at a financial loss. So that's about the liquidity part. So we have covered 4 parts till now. It's the life insurance, number 1, definition of it, what it means. Number 2, seeing if the capital is protected, the money that we invest and the money that we receive. Is that protected? Is the inflation protected? I mean, is the policy inflation protected? Are there guarantees in this scheme? And is it liquid? So these are the 4 things that we have talked about as is. Now the 5th one, which is on tax implications. So premiums which are paid towards the life insurance policy, you can take the benefit of it of up to 1.5 lakhs in a financial year, and this can be taken under the section 80C of the Income Tax Act. So guys, there is an Income Tax Act 80C, section 80C, inside of which you can take a deduction, a tax benefit of 1.5 lakhs every year. So within a life insurance policy, this tax implication you can take, this, you know, this tax benefit you can take. And where you could buy this policy from, so you could, life insurance policies can be bought from LIC, any other insurance companies, banks, retail stores also sometimes. There are websites through which directly you can buy such insurance policies. There are agents, brokers, some financial advisors as well who sell insurance policies. So these are various ways that you can buy the policy, and how you can buy it is you have to fill a form as usual and submit these documents which are proof of your date of birth and identity. Example, say Aadhaar card, passport, driving license, voter ID card. Sometimes they also ask for income proof in case you're taking a very, very high value cover. So they'll ask you for an income proof, medical examination certificate depending on at what age you're taking the policy, and nominee details. Nominee is an important part in life insurance because you're basically taking it to protect your nominee. That's the intention. Okay, let's now move forward on how to manage the policy. Guys, did you get all the aspects? Because life insurance is a big topic, and today we'll be like kind of breaking it up into various topics. So could you all say yes if you got everything that I said till now? Hi Harleen, Prajanya, welcome. Yeah, that's a type of life insurance, Harleen. Term life insurance is a okay. Ananta, you got everything that I'm saying? Great, thank you for sharing. Anybody else who is getting everything? Kavleen. Okay, Vinita. Got that. Anybody else who's getting it all? Okay, Raki, did you not get the tax part or did you miss it? Because I want to know that. Smriti, yes, you got it all. Okay. Okay, we'll talk about that, Kavleen. Term life insurance is a kind of life insurance. Swati, yes, you got it. Okay. Veena, great. Okay. Raki, you are the only one. Okay, you missed it. So Raki, the recording will be right here on our page for you to go over. Okay. I won't repeat just because you missed. If you didn't understand, it would give me feedback that okay, I need to kind of simplify it further. Okay, Aurelia, thank you. Thank you for sharing. And everybody engage so that you learn more. That's the purpose. Got that, Sarab? Thank you. So let's now move forward then. How do you manage such policies? Got that, Rekha? And good to have you after a long time. So how do you manage such policies? So you can pay by cash, you can pay by check, you can transfer. So NEFT transfers, online transfers are possible. That's how you can pay, and you will receive a policy certificate. And this policy certificate will have details like your name, premium, policy tenure, and terms of conditions. So that's how you will receive a certificate with all these details written, so that it's a written record with you. Eligibility, so all citizens of India, including persons of Indian origin, can do this scheme. The entry age is 18 years and above. Upper limit is there depending on the policy type. So the upper age limit exists, and it depends completely on the policy that you're taking, the company, the policy type. And you can take it even up to, like, the life insurance policies can be even taken up to 70-80 years. Like, that's the kind of lifespan that it can cover for you. And again, everything is dependent on the policy type and the insurance company that you're choosing. Guys, you may be noticing what I'm looking at below. So that's my laptop where all my notes are there, and I've simplified them. Got that? So sum assured. Again, how much money you receive at the end of the tenure of the plan depends on, again, the kind of policy you choose, the tenure you choose, the amount of premium you pay, and how your health is and what your income is. It is dependent on a lot of things. So you got to be really smart when you are buying such policy, because this is all that you need to look at when buying one. It's not as simple as, Guy and Lilia. It's not that simple. You got to really take care of these 4-5 aspects. So, if I can repeat it, it is the insurance, if it's the insured's age, it's, the policy type again, the tenure that you're choosing, the premium you're willing to pay, what's the kind of health and the income that you have. So all of that is dependent. Okay? The policy holding, so you could be an individual policy holder, or you could be a joint policy holder. The nomination facility is available because basically these policies are for risk management of dependents. So of course, you got to choose a nominee, and you got to say that, okay, if something happens to me or anybody in the family, then this is the person who receives the money. And like I said about termination, generally there is a financial loss that you incur if you take the policy, if you exit the policy before time. That's how it is. And guys, now before I move forward, okay, I want to share what's the objective of life insurance, because I see that a lot of us mix insurance with investment quite a lot. And is there a need to do that? Is a conversation that I would like to engage with all of you on. So the main objective of life insurance, guys, is risk management. It is basically protecting our dependents, protecting their quality of life. If, say, I am the main breadwinner, then, if something happens to me, then I want to make sure that my family, my dependents are taken care of, and their quality of life, my kids' higher education, my parents are taken care of. So the intention is basically protection. However, most of us mix the agenda of protection with investment, multiplying our money. And at Women on Wealth, we've been repeating for now 10 years, almost 10 years, we are completing this year. And we've been repeating that that's not a great way, okay? Because we believe that you should never mix insurance with investment. Insurance, like I said, the objective is protection, risk management, making sure that our dear ones are taken care of. And the agenda for investment is multiplying money. So these are two different intentions. If we mix them, neither do we get enough protection for our dependents, nor do we kind of multiply our money enough. So it's always recommended never to mix insurance with investment. Did you all get this? Could you all say, got it? Yeah, because this is a very, very important aspect that I intend all of you take from the live today. Could you guys start typing? Did you get it? Just say got it. And if you didn't, then say, okay, didn't get it. Okay, Raki, you got it. Thanks for that thumbs up. I quite like it. Got that. Vinita, Bina, got it. Anybody else? Did you guys get it? Because I know some 17, 18 of you are watching it. Got that, Raki? Okay, we have 2 Rakis today, is it? Okay. Kavleen, got that. Anybody else who is here and has gotten it? Swati, got that. Everybody, I wanna see you engaging. Start typing. I know only 3, 4, 5 of my people have said they've gotten it. Sarab, you got it too. Aurelia, got it. Great. Guys, start engaging. Because the more you engage, the more you learn. Okay? That's the point. Got it? So at least 7, 8 of you are saying that you've gotten it, and that's the most important part. Okay? Malvika, were you listening to the entire thing? So just, did you miss this or did you not get it? Like you didn't understand what I'm saying? Could you say that? Because I need feedback too if I am kind of simplifying enough. Yeah. So Malvika, I'm waiting for you to share. You just came in. Okay, then the recording will be right here for you. Okay, Namita, you didn't get that? Did you come in late or you didn't get that? Please share that. Because what I've done in my notes is I've really simplified it for all of us. Okay, yes Malvika, do that. Absolutely, the recording will be right here for all of you. Okay. Yeah, Rekha, and that's a myth, right? It's a myth. Like, what tells us that insurance will be safer, Rekha? Just because, we've heard it from our parents, it's just a borrowed conversation that we have. Inherited conversation, that's about it. I mean, otherwise, if you see, is it really protecting you from inflation? Is it really multiplying your money? I pretty much am not seeing both happening really. So, and I'm going to further kind of explain this. That's the purpose why I'm doing life insurance, because I think a lot of us just kind of fall for it. So let me go on. Thank you for sharing this. So guys, the facility of pledging the life insurance policy is also there. So which means you can kind of pledge your certificates and you can get loans as much as possible, and there are different, and especially this is available in endowment plans. Endowment plans are one kind of life insurance. Okay? So this kind of pledging, taking loan facilities available in such plans. Okay? Premature withdrawal I have already talked about. Okay, I'm looking more. Okay, now let me start talking about the riders. Guys, please note this down. If I invite all of you to make notes so that you can refer back, and also this video will be available for you to look at. But if you're writing, noting it down, then know that riders are additional protection benefits which you can take, and it can get attached to your life insurance policy. Example, a critical illness rider could be added. Okay, and this could enhance your cover, like how much money you will receive as sum assured could go up because of that. So critical illness is the first one. So which means like I'm just talking about a few critical illnesses. It depends on policy to policy which policy is covering what kind of critical illness, but I'm just mentioning a few. It could cover cancer, kidney or renal failure, major organ transplant, some kind of strokes. So these are majorly some illnesses that it can cover. Medical expenses could be covered, and especially they are on a rise. I mean, medical treatments can be crazy. So and especially medical treatment, medical expense rider could be important for people who are especially aging. So I know that we have our regular investors, Beena, Preeti, Neelu. So guys, if you are here today, then you need to know that you got to kind of probably look up for such riders when you're taking up an insurance plan, given the age. Hospital cash benefits, sometimes guys, even settling hospital bills can be it can be such a trauma. So ek to trauma of having a certain kind of a disease, and then curing it, and then on the other hand having a big hospital bill. So this could be another rider that could be added in. Major surgical assistance could be adding in. Disability could be another rider that could get added to your life insurance policies. So let me share a bit about disability. It could be temporary disability, like it could be, it's more like it could be total disability, permanent disability. And for that there are benefits which are available in a life insurance policy. And if you fear it, you may want to take it. Okay. And if you are a rash driver, you think someday you will end up getting into that, then you may want to take care of your dependents really well. So that's about the disability rider. And let me now move on to kinds of life insurances. Guys, could you start typing that you got everything? Did you get all the riders that I talked about? Could you just say yes, no? Did you get all the riders that I'm talking about? Just say yes, just say no, or say boring. Today you're boring me to death, Priyanka. Life insurance is like, oh my god. You could even say that. Okay guys, please start sharing. Yes if you got it, no if you didn't get it. Okay, Swati, thank you for sharing that you didn't know and you got to know about them today. That's the whole point of being together. Yes, Malvika, Beena, Anandita, yes, let's have some fun. Absolutely, Vinita, got that. So everybody has gotten about the riders, right? Like nobody is there who's saying like, okay, I'm not getting what you're saying. Yeah? Everybody is like, I love my smart investors, okay? I just love my smart women. Like more power to each one of you is what I want to say. Okay, the concept is definitely clearer now. Got that, Suman? Welcome. Welcome and thanks for saying that you've just joined in. Anytime you join in is a perfect time. Let's now move forward. Got that, Rekha? So guys, now let me talk about various kinds of policies. Okay, these are various types of policies. So like the first policy that I want to talk about is called a term life insurance, and this is a no frills policy. It is very simple policy. You pay a certain premium and your nominee gets a sum insured if something happens to you. That's it. It's that simple. There is no investment. It's a pure term life insurance. It's a pure life insurance, which means the intention is risk management only. There is no clubbing of insurance and investment in this plan. And like I said earlier, no frills. And this is also not a costly policy because it's a small amount that you pay to simply insure your life. That's about it. So that's the first, which is term life insurance. And like I was saying earlier, we often say, guys, do not mix the objectives of insurance and investment. Focus on risk management, and that can happen through the term life insurance. The second type of policy, guys, is the endowment plan. Okay. In the endowment plan, say, if the person passes on, then your nominee gets the sum assured plus some returns on the policy. Of course, depending, when the insurer leaves the world, and then, depending on that time horizon, they get the return also. So it's not just sum assured, it's sum assured plus some returns depending on the policy term and the policy performance. And if you survive the policy term in an endowment plan, then you get back all the sum assured and you get the returns on your policy. And of course, returns are dependent, they're pretty much market linked. So that's the endowment plan, guys. That's the second plan. The third plan is the child plan in a life insurance, and like the name says, and like the endowment policy, the intention here is to help our child create savings for his or her higher education or marriage. So that's about the child plan. The next policy type is the money back plan. Money back is where the sum assured is returned to the policy holder at periodic intervals. So over time, whatever is your sum assured, it keeps coming to you, and at the end of the tenure, you receive the profits that you've earned from that policy. So that's the money back plan, which is the life insurance type. Next is whole life plan. As the name says, you're covered for your entire lifespan. That's how this insurance policy functions. Okay, so like it's a kind of an endowment plan again, whole life plan, and it provides cover throughout the insurer's lifetime. So in other plans, what was happening, guys, it wasn't for your entire lifetime. Like it would expire after a certain age. But in this plan, it's for the rest of your life. That's the benefit. Or that's the type. I mean, I would say that's the type. Okay. The next plan. So the next plan is the pension plan, where you begin to collect money, okay, over time. And it is a kind of an income that you receive, a pension that you receive over time. And so first you pay the premiums, accumulate a fund, and then that fund comes to you over time periodically as a pension. So that's what this policy is, which is the pension plan. Okay. Now let me talk about the next policy. Next policy type. It's called the annuity. Very similar to the pension plan, where you receive a certain amount periodically. And of course, those regular intervals depend on the kind of plan you choose, the kind of policy, the kind of insurance company that we are choosing. So that's how it is. The last policy type is called a ULIP. Again, a very famous kind of policy. ULIP, full form is Unit Linked Insurance Policy. Unit Linked Insurance Policy is the full form, and again it combines insurance and investment, and it is generally expected to kind of beat inflation. That's what ULIP is. It's generally expected to beat inflation, but now that the inflation is rising, it's almost come to 7% in July. So now we can't say that about ULIP, but this is how it was known earlier to be doing that when the inflation was also low, and it is subject to market fluctuations, guys. So that's about ULIPs, and a lot of, you will find a lot of companies offering this plan. So guys, did you get all kinds of insurances? I talked about 8 kind of insurance plans. Did you get all those plan types? Could you just say yes, no, confusing, boring, or interesting, or eye-opening? Could you start sharing if you got it? Okay. Because my intention is that everybody who's come in today here really takes back value for your time. Okay, Beena, got it? Okay, Raki, very clear. Got that, Suman? Okay, I'm glad to hear you join in late and yet You've gotten it? Depends, Vinita. It completely depends on the insurance company again. You got to kind of check different plans. Okay, Swati, thanks for sharing that. It's clarified the difference and rather the confusion between risk management and investment management. Yeah. Yeah, Namita, absolutely. You bought an LIC 6 years ago, and if you surrender it today, you'll be at a loss. Got that, Namita? Yes, a lot of my investors have similar stories here. I think a lot of them will say that to you. Got that, Kavleen, Rekha? Okay. Yes, Malvika, lot more options than you ever thought. Absolutely, got that, Saram. Okay, so pretty much clear. Got that, guys. So let me start summing up, okay, what we talked about today, because it's a large topic that we discussed today. So some of the points to remember are: never mix insurance with investment. Insurance is for risk management, keep it separately. Investment is for multiplying money, and keep the agenda separate. Do not mix the agenda, because what happens when you mix the agenda? Neither will you manage risk, nor will you multiply your money well. So both, you will just collapse, and nothing great will come out of it. Second is, if you require riders, if you require additional benefits, then do go for them. There was an important concept about riders. Know that this is not inflation protected really. It may appear to you that the money you're giving is completely protected and you are multiplying it and getting it, but in reality, when you actually check for inflation, you will see that you're actually not making any money. So that's the second point that I definitely want you to take away. Third point, right? I mean, the second one was about riders, and the third one is about inflation and really the protection part that comes to it. And the fourth aspect is around the different policy types. So don't just fall for what you hear. Go over the policy document, understand it. If you don't understand, connect with each other, because that's what a community is for. A lot of you are in our private WhatsApp groups and communities. So engage with each other. Make sure that you are reading the documents and then only buying. Okay. On that note, guys, I complete the life insurance, my investment mastery session live here. Any questions before I leave? Yes, Swati, go ahead. Absolutely. Relook, go over the video, learn more, and that's the community. That's the agenda of this community. It's purely to upskill and grow financially. That's it. Yeah, Sarab, LIC helped you in your difficult times? Yes, absolutely. I got you. I got you. Thank you for sharing something so personal with us, all of us, and I truly value this sharing. And yeah, keeping the emotion aside, definitely when you take such policies and something happens, then at least the dependent is taken care of. And guys, we all have Sarab here who's being vulnerable and has shared what she's gone through. Yes, got that, Sarab, and we bless the family and the insurer who took that plan, because I think that's what matters. Any questions, guys? Any questions? Or is everybody clear about everything? No questions. Just say no questions if you don't have any questions. So either then it means it's so clear for you, or I've confused you. So as far as the comments come, I think you guys pretty much got it. Because I sat for about, I think over the last 1 week, I sat for about 3-4 hours simplifying this entire thing. So could you share? Yes? Okay, got that, Veena. Bye-bye. Veena has gotten it all. Anybody else? Any questions? No questions? Got that, Sarab. Thank you. Absolutely. One of the values of our community is to be grateful at all times for all people. Got that, Swati. Okay, guys. Thank you so much. Today my stand is falling left, right, and center. Okay, more questions are coming now. Okay, how do we decide on what percentage we need to invest in which insurance? Rekha, you got to first, you are our money gymmer, okay? So you got to first, 1 second guys, there's a breakdown, okay. So first of all, Rekha, what you need to do is never ever think that, okay, how much percentage I need to invest in which insurance. Don't think like that. Come from, okay, what are my goals? And where do I need to invest for these goals? That's how you need to do it. Okay? And then you need to say, how much risk management do I require? Depending on that, the money will come. So you got to say, how much risk management do I require? Okay? Did I answer your question, Rekha? Is it clear for you? Okay? Out of these 8 plans, which ones are better? Suman, I just answered this. Did you get this? It will always come from your financial goals. Like, what are your financial goals? Okay? And which plan do you really require? Because if multiplying your money can happen from other sources, then you pretty much do not need to buy any other plan other than the term plan. Guys, 1 second, the bijli is gone. I want to make sure that you guys can see me. Okay. Okay, so sure, Aurelia, rewatch this session. Absolutely. Yes, Malvika, you also came late, so do make sure you watch this. Okay, guys, great. So with all the breakdowns running, we managed to complete the life insurance live. Thank you so much for joining in and taking back value. If you got value, you like the video, do make sure that you share it with more women in your life and help us in reaching the mission of helping more and more women become financially educated. So I look forward to that support from each one of you. And on that note, I close with a lot of gratitude and love for each one. Thank you. Thank you, Namita, for that. Take care, guys. Bye-bye. See you around.